What's up, Mr. Sansevier? So thought I'd make this video and also review my trades. So you wanted to talk about Tiva. I know you were talking about this volume gap. High volume day. I mean, super high volume. It's like the average volume for the past couple weeks has been what, like 30 million, and it does like 3 times its normal volume. But here's what I wanted you to see on the daily chart is that, I mean, you tell me what the trend is, dude. So like, talking about moving averages. So this is the white line here is the 200 period moving average, which is basically the average price for the past 200 days. So anytime that line is sloping downwards, that's generally a good sign of a downtrend. This green line is the 50 period moving average, and anytime that's sloping downwards means like at least the intermediate trend is down. Like 200 is usually, like longer term, like institutional buying and stuff around there, around like those moving averages. So like this is kind of what they look at, and 50 period they look at as well. Some people use like 20 period moving averages. This like the midline for the Keltner channel is actually a 20 period moving average. But so basically you're seeing from like the 1 year chart. I mean, it's like in a clear downtrend. Gap down to all-time lows on high volume and then consolidated there. So I mean, we want to trade trend trades, dude. Like you want to trade with the trend, and like this is just like a really difficult trade. Like I mean, it went up today, and I don't know what it's going to do in the future, but I think we have better opportunities to look at. So I want to review my one shitty trade and one good trade yesterday from yesterday. So basically, what I'm talking about, like Labu is an ETF. Biotech ETF, right? And ETFs act a little bit different from real stocks in that kind of when they move away from their average price and they kind of get overextended, they don't tend to keep going. Like you kind of see this like move and then it pulls back to the mean, moves to the edge of the band, kind of like oscillates to the edge of the band. So this is one case of where I'm kind of being dumb, like looking for the wrong trade in an ETF. And I'm looking for a trend trade because my setup was that we have been trending, making higher highs and higher lows like on the daily chart, and just kind of consolidating like lack of price rejection at all-time highs, so overlapping for 5 days. And I'm just trying to be cute and trying to be early, and when the clear trade is like we get above like this 80-50 level, the all-time high is actually 80-91. So that's really where I want to participate at, and there's no trend trade in the middle of a range right here. So this is not this is trending, and then this is not. So or this is this momentum. This is a momentum move, and this is just a consolidation. So once it breaks out of there, either way, that's when we want to be interested. And so I placed a trade, somewhere like I was trying to be cute and say, okay, we had an intraday double bottom and flip VWAP, and I wanted to buy somewhere in here, and this is it's like breaking a lot of my rules to make this trade. Like 1, it's in the prior day's range. 2, it's within the opening range. 3, it's not above the open, the close, and the volume weighted average price. So we're under the open. So there's a lot of things that could have kept me out of this trade, like if I just follow my rules. So like I said, we're consolidating sideways. So this is one bad trade. But Baba, one good trade. Not like a fucking record-shattering trade, but so when we talk about those moving averages, look how like the moving average is sloping up in Baba, right? And Baba is like a high beta stock. It's people like the big institutions like trade this shit, right? So the 50 period moving average is sloped up, the 200 period average is sloped up. This is like an easy way to tell trends like right off the bat. You can just look at these moving averages, and so we're in a clear uptrend on the daily chart, like for the past year. Intermediately, we're making new highs, and we pulled back, and then you can see this like wedge pattern on the daily. So this is basically like another form of compression, making lower highs and higher lows. And so, I was looking for a breakout either way, but the trend is up, so it would have been better if we broke out to the upside. So we gapped up, and that made me pause at the start. But when we kind of just went sideways for the first 30 minutes of the opening range is like really tight in a high beta stock. So knew that was good. So I marked the opening range high right there, and I knew I wanted to be long like as it was coming back. Like if you look on the 15-minute, there's kind of like a resistance level here, and so you can see where the prior resistance becomes support here. Like it touched it right off the open, so it showed you the level was significant. Still, I entered on this flag, but I gave myself like room like below this volume weighted average price You know, my risk was about 70 cents, and you know, only ended up making about like a 1-to-1 on this trade, but still one good trade. You know, I really wanted to be offering or bidding in here for this like 172.60. At one point, I did have a bid in there, and I just like got impatient and just like got in here. So you know, if you wait for your price, like I can bid in here. You know, like if I got in at 60 cents, then I can definitely risk 50 cents, like way down here, and I know I'm wrong, like 50 cents away. And then, you know, get like a 3-to-1 instead of a 1-to-1. So, you know, just waiting for my price, like waiting for my moment to strike is a lot different. But like this is at least a good stock to be trading. I'm trading with the trend. I'm above the close the open and the volume weighted average price where I like to be trading. It's like and outside the prior, 3 days range. Breaking above the prior like last 6 days high. So, and I have a daily setup of like the fact that I'm looking for compression. The idea is like maybe there'll be a breakout trade. So let's so it's Tiva, Baba, Labu. Tesla was kind of the same idea as Baba, right? If you look on the 1 year, it's kind of making lower highs and higher lows, just like coiling up. Some people call it a coil. Obviously, this is doing it over a longer period of time, but still, thinking there could be a breakout trade if we take out these like lower highs or lower lows. So we get above this high. We can mark that with a line if we want. And an opening drive like right to it. And I mean, basically what you see is like you have a breakout idea and then you start going sideways. So this is like a consolidation intraday. It's not like end all be all trade either, but you could risk a couple bucks. A couple bucks in here and right in the middle, and that sideways consolidation, call it a flag, maybe like 3-to-1 risk reward. So still a positive expectancy. 5-to-1's lovely if we can get it, but like one good trade right there. Shit. Okay. Newlink is a stock that is a biotech penny stock. Okay. And this could have been like on my radar from like back in this day, and this is a lack of hard work on my end of like just basically saying like, okay, I have this gap day, and watch for volume like coming in, so it starts going sideways, and even on this other day, like they're kind of scroll this back, see above average volume. So basically, what I can see is like this gets put on my radar for an above average volume scan on FinViz from the night before or from this day, and I just keep it on and I put an alert above like 8:20, and so when it triggers intraday on this day, maybe I'm participating, maybe I'm not, but we kind of have a couple month base here, so it's kind of constructive for trend moves. So on the 5-minute, it's pretty obvious, and I'll scroll this back for you. But if you like just wait, it'll set up for you. So I didn't have to buy like right off the open. Kind of this like opening range price. We talk about the opening range. It's like the first like 30 minutes. You can define the opening range however you want. The best one for me is like the 30-minute opening range. So I use the first 30 minutes, and so that low and that high is how I define the opening range. And there's like a statistical significance that like the opening range will be the higher low of the day, like 14% of the time, which is still like a lot better than 1 in 34. If you read The Logical Trader by Mark Fisher, that's another good book I'd recommend that you read. He talks about that a lot. So basically, you say like the opening range high, and then look at the volume on this like up thrust, and then pull back and kind of consolidation, this like kind of tight going sideways. So you can buy at $11. You have to risk like 50 cents, maybe a couple hundred shares. Only buy a couple hundred shares. This is right in your price range, right? And then even if you bought somewhere in here, it's like kind of it starts going sideways, you buy right in there, and then boom, if you want to swing trade, right? So especially on these like wide range days, these penny stocks, they act a little different than other stocks, but for wide range days, like what we think the highest probability thing is like morning continuation and then a mid-morning reversal called the 80-20. So we get opening like spike right off the open, and then not really expecting like continuation here. So a lot of things I used to do was like see this like morning spike, and then I would try to buy in here to go long again, and coming off another wide range day. So just kind of like obviously you would have gotten stopped out like the next day. So could have sold right after the sub move and gotten that right there. So just an idea. And biotech's healthcare sector is pretty hot, right? So like to trade that shit. Talk about your G Pro you mentioned because of Tim Sykes, and like look at the difference of the moving averages, right? Like so, G Pro is kind of coming off a base, right? It's going sideways, kind of had this volume in the background that we talked about, but really, you see how like price keeps getting like hitting this level, like it couldn't get above this level. So all the people that were long here probably got out right here. People that didn't get out right here probably got out right here. So just like getting above this level is like really where we want to be long from. So maybe you could have taken that. Not my favorite. I mean, I saw this right here, and you could have risked like 15 cents and made what, like 4 to 1. So I mean, it would have been okay, but I knew this resistance level was right here, and it's not a good habit to be buying like right underneath prior resistance. So that is why I chose to pass on G Pro, even though it did continue to go up. So anyway, just wanted to discuss G Pro. I hope you understand what I mean. So like, let me go back and just like rehash G Pro one more time. So like Tim Sykes probably saw, so we talked about the moving averages. Like anytime like moving averages touch, sometimes people like to get involved. So maybe that's how he's been long since like this gap day. So I mean, he says he's been long for a couple weeks. I mean, maybe he bought like this prior like resistance become support, but like I don't know, dude. This isn't in a trending mode right now. And the easiest trades come from stocks that are trending and kind of pull back. Like that's what you want to be. They're already trending stocks, so just take the easier trades, man. I know you can't short, but I just wanted to show you just like some real examples of consolidation, like Weight Watchers. So kind of like, let's look at this. Consolidation thrust, right? So now we've got a couple overlapping days. Kind of like it made a rounded top. So this could be a potential like, final push for the end of the trend. We're making a lower low, and if we break out lower, like the next support's like somewhere, $38. So that's some room that I could be interested to be short if we break the lows here. I wouldn't want to see it like gap down. If it did gap down, I wanted to test up and fail here first and then come back down. But I'd like it to open in here and then maybe like opening drive. I could short a bull flag, something like that. What else is there? Kura. Blue. So blue is a biotech, and it definitely like sympathy plays a lot with like the Labu and Juno and shit like that. So, but look at the slope of the 50 period, the 200 period moving averages. Like it's sloping up, so it's clearing it up. You could define an uptrend like that. You can define it by making higher highs, higher lows, higher highs, higher lows, higher highs, and now we're consolidating at the all-time highs. Lack of price rejection. Look how price is kind of just like coiling up, right? So I'm not saying it's going to break out, but look at the volume thrust, like 2 all-time highs, and then just like slightly consolidating. So if price breaks out above like 29.82 and volume starts to come in, I want to be looking for bull flags. I want to be looking for high-level consolidations. That kind of, I want to be looking for prior. Like this is a 3-day level, So I see like touch it once, touch it twice. It was a kind of like over-under level over here. So I want to be involved, like if it prior resistance becomes support, like pulls back to there. So just a real life example of something you might want to put on your radar in the future. And then we talked about shop. So the 2 hottest sectors are tech and biotech. And I've mentioned shop to you, since like fucking way, a long time we've been talking about shop. So, is shop trending? Like if you use the moving averages, 50 period sloping up, 200 period sloping up, then yes. You say it's making higher highs, higher lows, higher highs, higher lows. So last time we made a higher high, volume's coming in, good volume's coming in as we break to new highs. And you say, okay, I'm going to buy the next pullback. So just like start trailing down high of this bar, trail down the high of this bar. So you say, okay, I'm going to go long when it breaks the high of this bar, right? If you just strictly trade off the daily chart, right? And then, boom, okay, you're like, okay, I'm in at 104.93, or you even here, like let's say you didn't trade it on this day, like 105, I'm getting long at 105, if it breaks 105, right? And so the next day you break 105, like you open lower, breaks 105, you get long, and your stop is the priority's low at 101.32. So you're risking like 370, right? And you're thinking, okay, the last swing was about 18 bucks. So I'm risking like, call it $4 to make 18, right? So that's like 4 to 1, easy, right? And so you just hold, and like a good like swing trading method is to use the last like 3 days rolling stops, like the last 3 days lows. So once you enter, I'm going to use the low of like these 3 days, so which would be 101.33. I'm going to use that like below there as my stop. So the next day you could trail this day's low. The next day you trail this day's low. Or if you want to, or you could just like trail the prior day's low. Like that's a more aggressive way to trail your stop. You could trail the lowest low of the past 3 days. So then, obviously, you get this day, right? Your stop's here. Get this day. Get this day. Then your stop is still here, right? And then on this day, your stop is now below this day's low, right? 108.03. Okay, still in it, right? You're still holding. This is when gaps work in your favor, man. When stocks are trending, you know what I'm saying? So if you want to swing trade and like hold for, what's this? 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Or not even 1, 2, 3, 4, 5, 6, 7, 8 days, right? So you're still holding this if that's within your plan. Volume's kind of drying up and it's like getting a little overextended as far as like not above average volumes coming in, and we're naked gapping above like the Keltner channel, which determines like the average ATR. So this is like 2.25 times the average true range, and it kind of like sets like channel parameters for what the average true range of the stock has been. So it's basically saying it's like moving away from the mean price a fair amount, and then when you gap to all-time highs and then close higher and the volume's kind of getting weak, that's like a little sign of weakness. So your stop is here. You want to start aggressively trailing your stop, you can put it this day's low, because now I've been holding for like 8 days. Oh shit, maybe I should look at lock-in profits and get really aggressive and trailing my stop. So just some ideas, man. And just like it's got to be one good trade. I definitely have gotten into, as we we messaged each other, like just talking about like trying to make the money back, trying to make money. And the second you stop trying to make money and just start trying to make one good trade is when you ironically start to make money. And I haven't made a lot of money trading, and I've been really shitty and done a lot of shitty things. And I've really backed myself into a corner. A good parallel would be like I'm on my last big blind. Like basically, if I hit my max stop loss intraday again, then I will bust out of my account. Fortunately, I'm in a situation where I can wait, and I can just like wait for that pitch and wait for that pitch, and I have to like by necessity now like wait for a good setup or I will blow out, and I'm refusing to blow out right now. So we'll see what happens, but it's my intention to only take like one good trade and dig myself out of this hole and get the ship right. So just some thoughts. If you have any questions, just like send me a message or just let me know. All right, dude. Peace.